Josh, I almost got the love note from Fidelity, but since you're not here to hear about my dumbassery, let's talk about GME, which is the reason you probably are here anyways. Josh, I want to go over what happened on Friday, the price action, and perhaps some ideas what we think will play out in this coming week.
Yeah, we closed from 150, which was a massive level of option interest. There was a bunch of 150 calls that we're really fighting over because this means if, let's say, I don't know the numbers off the top of my head, but call it 5 to 10,000 options, which means there is 100,000 potential shares that could get exercised, meaning a lot of delta and gamma weight that could be building up starting to go over next week. We again saw a lot of option FOMO and that is what we've been really talking about. The more option FOMO there is, the higher the probability of a massive MOAS event playing out.
Yeah. So let me just put some context on that for someone who might be thinking to themselves, I hear that you're speaking English, but I have no clue of what the words you're saying mean. So think about it like this. If you're an option market maker who is selling long calls, you are obligating yourself to deliver shares of GME. You don't know how many shares you're going to have to deliver, but you do know there's some number. You also have a lot of historical data, precedent, et cetera, and some very smart people working for you. And you come up with your best estimate. Think of this as delta. So, for example, just using random numbers here, let's just say that the expected delta from an option market maker was 100,000 shares. Then let's say the price suddenly ran up, and we almost had a 100% run up in price. Not quite, but we had a very good week last week for price action. And when the week closed out, we closed out at a key level for options at the 150 level. What this means is that if you're an option maker, you don't necessarily want to be for GME, nor do you wish to be against GME. You just wish to make the market. That is, you want to be neutral. And so you have your calculations. And if your calculations said we only need 100,000 shares, but then you have some events that happen that aren't really in your model, or you have some events that happen you would never put in your model because you thought that they would be irrational, you kind of have a problem. So let's continue. Let's also say you say, okay, well, listen, even if the price runs up or whatever, right, we're still going to, of course, increase our delta buy, or we will still buy shares to manage our delta risk. And even if they bullseye that, and let's just assume that they did at close of business on Friday, they say to themselves, okay, well, listen, of the 100,000 potential shares we might have to deliver, we know that only 10% of our contracts will be executed. So even though we're on the hook for 10,000, we, the option market maker, only need to have 10,000 shares in our back pocket. And you know what, Josh? We're cool because all last week we were correctly managing our delta. So at close of business on Friday, we have our 10,000 shares. Problem solved. Because we know that roughly, let's say one out of, again, numbers out of my ass here, one out of every 10 contracts are going to be redeemed. That is exercised, give me the shares. And so that's why we have enough shares. But now consider back to the lesson of 2000 or 1998 with LTCM when Russia defaulted on their bonds. Nobody thought a sovereign would default on their own denominated bonds because it wouldn't make any sense. You used to turn on the printing press. And what blew up LTCM was the model. And these guys were very smart. They knew what they were doing, but they just never assumed there'd be an irrational actor. In this case, there was an irrational actor in Russia when they did the default. I'm curious. I don't know if this is going to happen. This is what I'm curious to see if what may play out. If irrational actors opted to exercise more of their call options than the model of the market makers predicted. So going back to my example, if only 10% was the prediction, but let's say 20% chose to exercise, that means at the open of business on Monday, the market makers who sold the options, well, they had an obligation of 20,000 shares they need to provide. And of that 20,000, they already have 10,000. So they've already good on that front. But they're also short another 10,000 shares due to this. This is the gamma exposure that they're now exposed to because they didn't correctly manage their delta risk. This means that those market makers have to go into the market and they have to purchase these shares. No ifs, no ands, no buts. There's no bona fide market making activity. There's really no shenanigans they can do on this front. And so you see a tremendous amount of price action. My guess is this is probably part of the story of what happened back in January, late January of last year when we had the sneeze. So this means that my guess is you would see price action if there is a gamma event. So in other words, that is if the market makers need more shares than they thought they actually needed, so they have to buy at market, you'll probably see the price shoot up on Monday, probably some action on Tuesday, probably Wednesday or Thursday, it'll give some back. But then the question is, what happens at the end of next week? Josh, your thoughts?
Another thing that we saw on Friday was the cost to borrow increase again. I mean, almost everywhere was above 20%, which is massive. I'm pretty sure Ortex, the average was in the 30s of percents. Everything was increasing, as well as the amount of shares available were going down. So the available shares to lend were going down, and the cost to borrow were increasing. Means the supply of shares were decreasing. So as Justin was just saying, if there is this event and the amount of shares are already decreasing, a small amount of buy pressure, forced buy pressure by these option makers could cause a massive run. And what would that do? If we saw a big spike, that is going to cause these irrational decision makers, retail, to FOMO in, something that again is not predicted in their models. They are all smart and dandy, but what happens when they are dealing with irrational people? I mean, when there are like quite literally, if you are scrolling through some of these Reddits, some of these Twitters, I mean, a lot of retail are just complete and utter idiots, and I'm sure
And
we
we say
feel
that
the same
fondly.
way.
Yeah, us too. Just to be clear,
We
us
yeah,
too, us
we are
too.
not we are
Yeah.
not bashing them. I mean, we are the same idiots, but I mean, some people are posting like, what is this that I just bought?" Or like they just have no clue what they're doing, and that's fine. I mean, if this is your
I've
gambling money,
YOLO'd
go
in
for
on weeklies. Yeah,
it.
I've YOLO'd
I
in on weeklies.
Yeah,
What am I supposed to
and fine,
do?
yeah, we did the same thing. I mean, we see all these people just buying fucking weeklies, just making extremely irrational decisions. These hedge fund guys are extraordinarily smart, and they're used to playing against the smartest people available. So they're putting their models against fucking the JP Morgans, the Citadels, these super high quality pi-fi type quant teams. They don't expect to see a bunch of doofuses just doing irrational things, and that is what could really take them down.
Yeah, exactly. I mean, like, how are you supposed to construct a model to deal with irrational? So, in other words, the model gives you an output, and it's like, okay, one out of every like 1,000 times, whatever the output is, we're going to do the opposite. Like, you can't code that in. I mean, like,
Yeah.
no, honestly, like, if you put that into that, you're going to be fired. So, as I'm fond of saying, like, well, what's the phrase that Superstonk says? We can remain retarded longer than they can remain solvent. And like, honestly, Josh, there might be something to that. But here's the thing. Here's the thing. Here's the thing. If you have okay, so think about it like this. Suppose that the people who are short, think of them as like Godzilla, okay? And like Godzilla is running around the market, like causing all types of carnage. And we're just, as humble human beings, we can't fight Godzilla. But if we can like piss off, I don't know, like Mothra, or like who does Godzilla fight? Mothra, right? Or whatever, right? Like if you piss off like another version of Godzilla, that would be like, the option market makers. Well, the option market makers, if they have to go into the market and if they have to basically buy from a pool of GME shares that isn't deep enough to cover the demand, that's like you have these two titans fighting it out. And so, in other words, it's like the way like the eagle kills the goat on the mountain. The eagle can't take down the goat per se; it's too small. But what the eagle can do is it can wait for the goat to climb up really, really high, then attack the goat, throw the goat off the mountain, and actually, it's the fall on the way down that kills the goat, not necessarily the eagle. And the eagle is the spark that does it. So, anyways, my thinking is that if for whatever odd reason, good or bad, this is now on Reddit's, like when you think about when I say Reddit, what I mean is like Wall Street Bets, Super Stock, etc. Like suddenly, like people are starting to focus more on this. If you see material price action on Monday or Tuesday, I suspect a lot of people, myself included, will see that it's confirmation bias. I should just pause to note that I love it when I lie to me. I'm really good at it. Anyways, I think that you might see things calm down on Wednesday or Thursday, which I'd actually be very pleased for because that would be an attractive entry point, especially if people wanted to reload their guns to buy weeklies for the end of that week. And the entire thing just starts over and over and over again. And so I don't know what the options are, but as long as the EFT creation, so let's say X or T, whatever remains on rake showed, I don't know if the shorts will be able to get it under control or to have as much control as they otherwise would be able to exert on the price for that. Again, Pi-Fi does is the one you want to check out for that, seeing the metrics on that front. And anyways, in conclusion, the last thing I would say too is that when you think about like the Ortex data, or you think about the Quest trade data, or the short borrowing rates, it's the same way to think about, the option rates and to think about, what's being exercised. Don't try to pick out a particular number. I don't think we're good enough to do that, but rather just think about it in like big terms. Are the numbers generally going up? Or are they going down? What is the rate that they're going up? Or to say it in English, this Friday when we closed at 150, was there, and assuming enough people acted irrationally and exercised their options, was there enough irrational action to exceed the shares that were bought by the option market makers to put the option market makers into a forced buy situation come Monday in order to satisfy their gamma exposure? That's, I think, the way I think about it.
Yeah, and we saw this massive price movement. Everyone knows that Justin's a humongous GME bull. So how in the hell did you almost catch a margin call, Justin?
Oh yeah. So funny story. Like back in the day, like when I first started to like playing with options, I was doing like Pfizer options, like maybe 2 years ago or whatever, right? And like I had a Pfizer call that I forgot to close out, and like so Fidelity's my main broker. And the way Fidelity does it, even if options like 1 cent in the money, it executes. And what happened was that I had maybe like $100 in cash in my account or whatever, right? And like Fidelity was like at 50. Oh, it was like it must have been like 500 or whatever, right? The point is, it's like I wake up one morning, I look at my balance, like, why do I have $50,000 in this? Like, that doesn't make any sense. Then I scroll through the thing and I had the what I like to call the love note from Fidelity. They were like, yeah, you need to like take care of this like now. I was like, oh. So, anyways, I was able to basically sell off the shares. I called in Fidelity, and what happened to me last time, I was able to catch it because of course, I'm still a dumbass, but not as much of a dumbass as I was in the past. Was so with Fidelity and many other brokers, GME you can't margin. In other words, any GME position has to be 100% cash supported. Probably a prudent and wise thing to do. But I had two calls that exercised in the money, and then I was checking out the cash position, the available cash I had in my account, and I realized, like, well, wait a minute, these things go through. I'm going to be a little short, and it wasn't too bad. It's maybe like 40, 45, $4,700 short, but still, nonetheless. So I moved some money around on Friday, took care of it. But like I said, it's one of those peculiarities when playing GME. You kind of need to make that manage. And I should also note too, in a normal market environment, no broker would care. It's like, oh yeah, whatever. And even talking to Fidelity, they're like, yeah, like typically we would not even blink at this, but because it's GME, yeah, you need to take into that.
Yeah,
So
on Friday, when I saw the text from Justin that said, "I'm about to get margin called," I was like, "What the fuck is this idiot doing?" I'm like, "What are you talking about? Your portfolio should be up," and he just sent me the picture. He needed to put up, like, $14,000. She's like, "Yeah, I gotta call my banker." He's like, "Gotta
no, it was
gotta deposit some money."
yeah, yeah. But anyways, there was that, and the other thing too is like I actually have quite a bit of cash in my account. But if you're doing cash secured puts. That sucks up that encumbers a lot of it. And so just a side note, we'll do another video on this, but there is way I'm playing Bed Bath and Beyond is basically writing puts. So no, it's selling puts instead of buying calls. But again, that's a separate video for another time.
Yeah, guys, I will, hope you guys enjoy the rest of your weekend, and we will see you again soon.